Hello, everyone, and welcome to the Trader's Mind Chat show. My name is Mike. I am so incredibly blessed to be here with Kevin Marder. Kevin Marder is the co-founder of MARKETWATCH. What a way to wrap up 2019. We've got Kevin on here on the show. He has 34 years of trading experience, and he's somebody that I've actually admired from afar, and also we've connected a couple of times on Twitter. Such a great person, resource, such a great depth of knowledge, and he's come up with these 7 truths of what I like to call trading vitality that are just absolutely incredible. I'm thrilled to walk through them with everybody that's here. Thrilled to talk with Kevin today. Kevin, welcome to Trader's Mind Chat. Thank you for being on the show.
Thanks for inviting me, Mike. It's always fun to talk about trading.
Yeah, absolutely. It's my personal favorite topic. But so we were actually talking for a few minutes before the show started, and one of the most important things that you were talking about was this ability to take losses as being one of the most important things, and seeing them as not just like a loss, but like as a learning opportunity. Can you walk us through a little bit more of that, some of your personal experiences, how you came to see it this way?
Yeah, Mike. Yeah, what happened was, well, first of all, if there's one thing that you take from this conversation that I have with Mike here today, it's the importance of handling a loss gracefully. Mm. Some of us don't have that problem. Some of us used to have it and overcame it, and others still have it. And so, but it's very important, because if that's left unchecked, it can branch into other problems. I used to have this problem myself. Now, I never had it as a position trader of breakouts. I never had that problem at all. But a number of years,
for the newer traders in the room, can you define what that means? Because we do have some people that are brand new to trading.
Okay, position trading, you mean?
Yeah. Well, what's a position
okay, so
trader?
Position trading refers to when you hold a winning position for several weeks to several months, and that's also known as the intermediate term. Mm-hmm. And breakouts are just, breakouts of high momentum stocks that come out of a basing or sideways consolidation area.
Perfect.
And this is really the essence of Bill O'Neill's whole trading strategy, which, from what I can see, most people on Twitter follow it, or more people on Twitter follow that strategy than anything else. And that's the strategy I started with and traded for the first 19 years of my career, and still trade it. But a number of years ago, I branched off into swing trading with some day trading. And that was when I began to have problems with taking losses.
Interesting.
Instead of taking a loss as, water might leave a duck's back, okay, I started taking the losses personally. And it didn't go on really all that long, but I knew that it was a weakness of mine. And, when you have weaknesses, we all have weaknesses, both in trading and life. We also have strengths. And I think it's important that people that are trying to succeed in trading, or maybe they're already successful and they want to get better, take an honest appraisal of your weaknesses. Figure out what they are. Maybe you already know about what they are, but figure out what they are and don't keep sweeping them under the rug. The thing that I used to get over this problem, was it sounds very basic, but I came to the conclusion that I was not different from everybody else. In fact, I was exactly the same as every other trader. Everybody has losses. All traders do. From the most experienced, successful traders to the least experienced trader who just started trading last week, every single trader is going to have losses. And you definitely do not want to take these losses personally. One of the things that can happen when you do that is you can develop an inferiority complex regarding yourself as a trader. Maybe not yourself personally in your life, but as a trader, you may begin to develop the wrong types of feelings about yourself.
There's something real interesting that you had said there, Kevin, if I might interject. You had said that when you transition from being a position trader to being a swing trader, that was about 17 years in, and it was at that point that you started to have these kinds of emotions. Is that right?
Yeah, I think the reason could be because the shorter time frame you go, swing trading is generally considered to be when you hold a position for 1 to 10 days or 1 to 5 days. And obviously day trading, you're in and out the same day. I think the shorter the time frame, the more challenging it is, and at least initially, and you're going to have more losses. And you can also have a higher string of losses in a row without a win. And I think all of that develops into it's just more challenging. And so you're going to be, whatever weaknesses you have, when you begin to day trade or swing trade, some of those weaknesses are going to show up.
So it was the more frequency of losses coming at you, right? Like so as a position trader, you might still have the same number of losses, but it's spread out over several months versus everything's condensed into this a couple of days, or even if it's a day trade, like a couple hours.
Yeah, that's right, Mike. When you're a short-term trader, you're putting on a lot more trades than when you're a position trader.
Interesting.
So I think, again, you're just kind of looking at yourself in the mirror a lot more often.
This is great. Because well, something that I'm doing right now, I'm starting to try my hand in the land of Forex, and there's a lot shorter term time frames and day trading that I'll be doing in that too. So it's great to have this level of awareness, because I'm very similar to you at this point. I'm 20 years into trading now, and I'm starting to make that transition. You've made that transition 17 years in. So this is a great thing that I've got to make sure to check the box for me too. Just because we have a lot of experience doesn't mean that we're immune to these kinds of things.
Yeah, actually, just to be totally accurate here, I started investing in 1985, and then I read Bill O'Neill's book in 1990, and that was when, that was a life-changing experience, as I'm sure is the case with many who have read that book. So 1990 to 2009, all I did was trade Bill O'Neill's strategy of buying breakouts. And so it was in 2009 I began looking into short-term trading, which again is day trading and swing trading. And actually, I spent a few years in Forex, Mike. Very, very challenging and fun market. We'll certainly have to talk about that, another time. But one problem I've seen from a certain number of people is that they come into the whole game of trading perhaps from a background of being overachievers. Let's say they went to a great college, an Ivy League school, came out, got a job at the most prestigious investment banking firm on Wall Street, which many consider to be Goldman Sachs, and they did well there, and then they got into trading, and they just kind of assumed that they would become successful almost immediately, because everything else they'd done in life basically turned to gold. But the problem is the market, of course, does not know anything about what school you went to, or that you worked at Goldman Sachs, or even that you exist. And that's a problem I've seen certain people have, but they learn before long that is, that trading is different. I studied business for 6 years at the collegiate level, and a couple of years were at the master's level. And I can tell you, I learned nothing about investing or making money in those 6 years. Everything I learned was due to trading, hands-on experience, obviously reading a lot of books, like Bill's book, for example. So that whole ego thing, we really have to kind of manage that, at least in the beginning. Getting back to taking losses properly, one of the things that can be a problem for some people, and I actually had it happen to me once or twice in Forex, was so-called revenge trades, where I actually took 1 or 2 of these trading Forex where I felt like I wanted to get back at the market for taking my money 1 or 2 times, okay? And even while I was taking those 1 or 2 revenge trades, I was saying to myself, you're actually taking a revenge trade here. Do you really want to do this? And I just kept plowing forward, took the trades. I don't know if they were winners or not, but while I was in those trades, I was trying to practice something called mindfulness. And mindfulness is nothing more than just living in the moment. You're living in the moment, and you're aware of your feelings and emotions.
And how did you go about doing that? Well, did you have a meditation practice, or how are you being mindful in the moment?
No, it was just kind of learned by doing, I guess. But the point of that was just that I did not like the way I felt during those 1 or 2 revenge trades. And thanks to being mindful about those trades, I experienced feelings that I'd never felt before about myself. They showed me a different side of myself that I did not like. And when those trades were over, I resigned to never do that again, and I never have. Okay. Then, so that's one thing where an outsized ego can really lead to. Another thing is the so-called afraid to trade syndrome, where someone just, they didn't like the feeling of losing on one trade, and so now they're not going to take a trade, even though there could be a perfect setup, 3, 4, 5 days later, but they're afraid of going back to that same, sense of disgust and dismay that they experienced in the prior losing trade. So, again, a lot of this just has to do with the beginning of this little conversation we're having. It's just, if you're not taking losses gracefully, you need to really work on that. One thing you can do to help with that is to position size accordingly so that you're indifferent to the outcome of a trade. Now, I'm not saying this is necessarily what everybody should do. If you're experienced, for example, a lot of O'Neill style traders, myself included, once we became fluent and saw some degree of success with the strategy, we decided to use more concentrated position sizes and even some margin. And so I'm not saying that's wrong, but if you are not successful yet, and trades, losing trades really kind of bend you out of shape, this would be one way of muting that or getting rid of that from, getting rid of that part of your personality, just position sizing so you're indifferent to the outcome.
Right. A lot like a another author that talks a lot about that is Van Tharp. Are you familiar with him?
Oh yeah, I love his book. Yeah, the first book, I think it was.
Yeah, Trade Your Way to Financial Freedom.
Yes.
And there's my personal favorite is Super Trader, where he starts to get more into mindset, as well as like building a business around trading.
Yeah, no, he is fantastic. That is a great book for anybody to read. Probably the top, in the top maybe 6 or 7 books I've ever read on trading, for sure.
Yeah,
Yeah,
no,
another thing sometimes I see, particularly on Twitter, I just think it's important that there be a sense of positivity if you're going to embark on a career in trading. You want to be surrounded by positivity. You want people, friends, family that are going to uplift you and not tell you you should have your head examined for trying to be a trader. And that happens. I've seen people where, they've tried to trade Forex, for example, and their spouse was, giving them the evil eye, and their family was always sort of teasing them about it. And that's really not the environment you want. Even something like your Twitter profile. Every once in a while, I'll see somebody's Twitter profile and it will be so negative. Like, for example, I am a terrible trader. And you have to get rid of
you're kind of
that.
reinforcing that belief.
Exactly. So instead of saying I am a terrible trader, what about I look forward to improving my trading skills?
Oh my goodness. I love that you went down this road, because like there was this other book that I finally read after having this on my reading list for years. I'm sure you've heard of it, Napoleon Hill's Think and Grow Rich. Have you read that one?
No, I haven't. I actually have the book here on my hard drive, but have not read it.
So there's a fantastic exercise in that book that talks about writing out the goal that you want to achieve. Then you're going to write down what you're willing to sacrifice for that goal, because there's always this balance. Nothing comes for free. So what you want to achieve, what you're going to sacrifice to get it, and then actually seeing yourself and writing it down, like actually seeing yourself achieving that thing that you want to accomplish. And then the last part of it is writing down that the only thing that's standing between you and achieving said goal is executing this plan. And his idea was to read that aloud to yourself, or read it aloud both in the morning when you first wake up and at night before you go to bed, because that's cementing it more in your mind. And to your point of like what you're putting out into the world, and reinforcing like those negative kind of beliefs, right? Like you tell yourself you're a terrible trader, you're going to stay that way. But with Napoleon's idea, you're reinforcing the thing that you want, and therefore the law of attraction brings it to you, and you have a much better chance of getting it. So I love that.
Yeah, if you're a relatively young, or not young necessarily in age, but if you're a relatively newer trader, it really does help to see some sort of success in the first few months of trading. The success may be, 3 winning trades in a row, or it could be, a nice returning month. But whatever it is, once you experience that, that's going to help you get through some of the rough times. I actually, I traded a Forex strategy once for several months, and it used a reward to risk of 4 to 1. Now that may sound good in position trading, but if you're a swing trader or a day trader, 4 to 1 can be very trying on your psyche, because you have a lot of losing trades. Your break-even win rate only has to be 20%. but the problem is sometimes you're going to have a number of losing trades in a row. And I had done my back testing on this strategy, and I knew that like clockwork, once a year there would be this drawdown. But the results were very good outside the drawdown. So I started trading, and after trading it for about 3 months, there was this period where there were 16 losing trades in a row. Now, what saved me there was I was using account risk of 0.5%. So that was an 8% drawdown, which is acceptable to me. But the reason I'm bringing this up is at that point in time, I had no problem with taking losses personally. I took losses in the right way. And even though I had 16 in a row, it never got to me. I took every one just, the way a trader should, and divorced the loss from any feeling about myself, my worthiness, etc. And I ended up, stopping trading that strategy after 16 losers. And it was nothing new to me, but it's very different to, say, do a back test and look at the back test results for several years and see this kind of thing, and then go out there and put your hard-earned money on the line. It's like a wholly different experience, as I'm sure most of us know. So, and another thing I might add, Mike, is traders come into this business thinking that it might be months or maybe a year or something until they become successful, but they don't understand that, or maybe they don't think of the fact that most higher paying professions, in this world take more than just several months or a year. The person who pursues a degree in law or a career as a doctor, they're studying and training for multiple years at a very high cost, for their education.
Could you imagine a doctor walking out of med school in a year, coming into the OR and saying, all right, let's go. And he's not like looking at the textbook while he's getting ready to prep you for surgery?
Yeah, and exactly. And a good example of this is none other than one of the market wizards, Martin Schwartz, who turned out to be one of the greatest, really, of our era, maybe of all time. And the first 9 or 10 years, I believe, in his trading career, he was not a success. And he turned it around eventually and became great. So, we all go through these similar mindset issues. Most people that have been around trading for a while will tell you, significantly more important than the entries and exits are what comes between your two ears. Yourself, your emotions, and how that can interfere with what might otherwise be, a great modus operandi that you have. So, yeah.
I love it. I love it. And I love how the awareness, so the awareness and the position sizing came hand in hand too with those, with that strategy that you were trying. So you were able to withstand that 8%, but even while like being aware of that it was coming, like to actually sit through it, the 16 losers in a row, like just then figuring out like that, this actually isn't the system for me. And then being willing to move on, because a lot of other people too, like they'll do this system, they put in all this time, this energy, paying for a course maybe, and they're not willing to give it up because of all those sunk costs. But it's kind of like if you're driving in the wrong direction, are you just going to keep on driving in the wrong direction because you've been driving that way for the past 2-3 hours, or are you going to turn around?
Yeah, what really comes up in a situation like that is you begin to doubt the system. Like, is it, gee, it's at 16 in a row. This is kind of what I saw, happen each year for the last few years of the back test. Actually, the back test was someone else trading this system. So it wasn't me really back testing. It was kind of looking back at their results for the last, three or so years. You start to, when you're in the middle of a drawdown like that, like I was, you start to wonder, well, gee, okay, there's already been 16. Will there be another 16 losing trades? Yeah, but the thing that really saved me there was just the fact that I used risk of 0.5%, which I really usually would not use, but that was a particular system that you might have 5 or even as many as 6 trades in a day. And, if the currencies that you're in happen to go south or the wrong direction, while you have, say, 5 positions on, you could be down on every position. You might lose 5% in a day. That's why, I used the pretty conservative account risk of 1%.
Mm-hmm.
So, most people are fine with 1 to 2%, and that's what I prefer to use myself. So, anything else, Mike?
One thing that you mentioned before too, with building positivity, one of the most important things that I feel with building positivity is the people around you too, and you mentioned that as well. How can people get more Kevin around them? More of you around them?
I think you just have to expose yourself. Expose yourself to more education and learning.
No, right, but how could they get more of you personally around them?
Oh, me personally? Well, I have a Twitter feed, which is at Marder Market, and there is a link to a website I have. I offer an advisory service to traders. There are 4 videos a week and a couple of written reports, and we're covering mainly the O'Neill breakout strategy. And what's a little unique is that I am including a couple of my swing trading strategies as well. And so far, we've been doing pretty well with those. We've been averaging, I would say 67 to 69% win rate. So that's been, that's been a definite plus for the overall service.
So this is the website right here, marderreport.com, and they could also follow you on Twitter, Marder at Marder Market.
Right.
That's amazing. Well, Kevin, you've given us a lot to think about, and I really want to thank you for coming on the show. I know that you told us that you would give us a half an hour, and I want to be respectful of your time. So this has been amazing. Thank you so much.
Yeah, well, you're very welcome, Mike. Always fun to talk about trading, and hopefully some of you listeners have gotten, maybe 1 or 2 small tidbits from this. And yeah.
I got a lot more than that. You're being modest. I've gotten more than 1 or 2 tidbits. That's for sure.
Well, good. That's what it's about, Mike.
Absolutely. Thanks again, Kevin. And thank you everybody for attending the live session. The recording will be up in about a day or 2.
Great. You're very welcome, Michael.
All right.
Okay, so long.
Have a great day.
Mm-hmm.
Happy holidays.
Yep, bye.